Hey everyone, it's Sang from KSE. Welcome to the next episode of Case Start. I'm really honored to be joined here by Dok Kwon, who's the founder of CupBop, and I know many of you have seen maybe his co-founder on Korean TV, but you've seen CupBop everywhere, and now we have him on our show. Dok, thanks for being here. Why don't you introduce yourself for the crowd?
Hey everybody, thanks for having me. I'm Dok Kwon. I am currently the president, COO, and partner of CupBop. Uh, I wasn't a co-founder from the beginning. I joined a few years down the road when CupBop was still relatively small. We're still not big, but essentially as a co-founder level. But technically, I didn't. My founder, he's the founder, our current CEO, Jung, the legend, the myth, and I joined him. Um, yeah, I came to the States when I was 11. Grew up in Utah. Went to BYU. Studied accounting. Didn't like accounting. Um, and so thought, um, how do I go out, get out of college and start with a bang and make a lot of money? I started searching, and they said go to New York and join a hedge fund. So I was like, okay, that's what I probably need to do then. So I started my career at Goldman Sachs in their global investment research division, so equity research. Covered, I stayed just under 3 years. Had an opportunity to be on an energy team, and then aerospace and defense, so industrial side as well. After about 3 years, close to 3 years, I left to join Citadel, and stayed at Citadel for about 4.5 years. By the time I decided to resign, I was running the industrials book on our team. Our team was originally an energy team, and I started the industrials book on the team and was managing, I don't know, 470-ish before I left. And yeah, now I'm selling, cup off. So
Well, for those that maybe not from finance, 470, what he's referring to is $470 million. So that's as we say in finance, that's half a yard. That's like $500 million.
yeah,
So it's quite a lot. And then you made a decision, to become uh, an entrepreneur. Like you
yeah,
said, you weren't co-founder to begin with. So
yeah,
that's kind of an interesting journey, right? I've only heard that personally a few times where you become co-founder later on
yeah.
in that journey. Can you share what that was like and like what that discussion is like?
Yeah, so I always knew I wanted to do something entrepreneurial. Always. Um, wasn't sure what. And as I spent time in finance, even after a few years, I think I always knew that I was going to take that journey. Um, but timing is always a little bit tricky. You got to find the right opportunity. So I'd been thinking about it for a number of years, just, didn't pull the trigger. It's hard to pull the trigger when you kind of get, more used to what you're doing and everything. Um, and so kind of I think I was what, seven at that point, 7.5 years out of school. I thought, all right, like this year, this is the year. I'm gonna do it no matter what. I'm gonna start looking. Um, Initially, like restaurant was never even actually on my mind. I know nothing about restaurants other than that, like just from a very basic investor kind of knowledge. Oh man, that's such a tough industry, right? Like no
Yeah.
barriers to entry, capital intensive, operationally intensive. I mean, that's the worst business model you can have. So wasn't initially thinking that. Initially, I thought like everybody else, I'm probably going to join some SaaS company and do it that way. Um, got a few opportunities, and then there are a few things that I realized all along the way. Unless you have a burning desire and a product that you have on your mind that you think will really appeal to the market, um, it's not easy to start, right? From
Yeah.
ground zero. And typically that involves a lot more risk as well, right? Um, and I didn't have any, burning ideas in my head. So I thought, okay. So started looking at, more early stage tech startups. Ended up getting a few offers, and honestly, it just wasn't that attractive.
Hmm.
Um, that was that was a big kind of surprise for me. I mean, part of it is like also that you can make a lot of money at Citadel, right? Like you have opportunities to make a ton of money if you do well. Um, but unless you're kind of a co-founder, group, if you join a startup down the road, it's like you do the math of, after all this dilution, if I want to get to kind of, let's say you have a certain number in your head, it's like they need to be unicorns
It's
and
all
actually
unicorn.
need to exit for you to actually, cash out. And I thought, wait, like I'm not a co-founder. I don't even get to drive the ship. The chances of, sure, there are a lot of unicorns too, but how many of them actually make it to exit from unicorn status, right? Like that's a different story too, right? And so I thought, the risk reward might not be, that attractive. And so I just kept looking. CupBop was a food truck that I knew as a customer. Right before I left Utah for GS, is when the Cup food truck started, and I was an avid customer for those few months that we overlapped in Utah. And I thought, wow, what a brilliant brand! This is an awesome brand. And then had kind of forgotten about it. And then as I was looking at other industries, I just remembered like watching CNBC when Shake Shack IPO'd. And I remember they were like 60 some odd locations IPOing at like $1 billion. And for a split second, all I remember thinking is, oh my gosh, that's got to be a short, and just going on,
Yeah.
on my day. And I was like, okay, how are restaurants? So I started doing some industry research on restaurants and was super shocked about, especially kind of these QSR, quick service models, and how they were valued in the marketplace. I like most investors honestly don't have a good sense of just how valuable these companies
Yeah.
are, and I had no idea, right? Like, and I've done this a lot. I mean, you even talk to most PE guys or hedge fund guys who don't know much about restaurants, and you ask them, hey, what do you think the market cap of like Chipotle is?
Yeah. Yeah.
Like, I would say 80% of the time, the answer I get from finance guys is like somewhere between like 5 billion ish
Okay.
is like the number I usually get.
Right.
Like, and they're like 100.
Yeah. Yeah.
It's wild.
Yeah.
And so that intrigued me and thought, what? That's actually kind of crazy. Started looking into it and realized that, even though it's a very tough model, if you can build a great brand, because at the end of the day, that's a tough thing. That the only moat you have as a business is really your brand, because you can't,
Right.
when you don't have patents, you don't have any of that. There's really no barriers to entry. Um, and so I got very interested. That intrigued me, and so I just hit up the founder, who was at the time, running the truck. That's how I got to meet him. And we're like Facebook friends because there aren't that many Koreans in Utah. And I just
Oh,
messaged him.
okay.
He's like, hey, we should talk.
You didn't know each other.
Yeah. Well, yeah, because I was a customer. He was,
Right. Right. Right.
running the truck at the time. And we should talk. So we started talking. I was like, how's business? How's everything going? We were like, at that time, KupBop was at like 9 locations.
Okay.
And what he told me was, man, people love our brand, but it is getting extremely, extremely difficult to run. And it's true, like for restaurants, generally like 7, 8 locations is when you start like brute forcing everything, like starts completely breaking down. And you have to
Mm,
have
mm, mm.
systems and procedures or you just don't survive at that point. And I looked into it, talked with the founder. The founder, amazing guy, creative genius, and he really convinced me. He was like, "Hey, look, there are a lot of really wealthy, successful hedge fund managers in New York. There are a ton of them, but nobody's been able to create a national brand out of Korean food.
Yeah.
Like we could be the first ones. And that is what totally sold me. I was like, oh my gosh, that's like the coolest. That'd be the coolest thing
That's the
ever.
best pitch ever.
I was like, wow, that would be incredible. And it's food, right? Who doesn't
Yeah.
love food?
Who doesn't like food? Yeah.
And the market was the competitive landscape was good too. Looking at kind of the QSR space, the only Asian brand, like national brand, is really Panda, and that's it,
Mhm.
which is
Mhm.
absolutely crazy.
Mhm.
So I thought, yeah, like actually, there's a shot here.
Yeah.
And so we talked for a few months, and then yeah, I packed up, moved back to Utah, and joined
Yeah.
in the summer of 19. So it's been just over 5 years now.
Just over 5 years.
Yeah.
Yeah. And so after you joined though, well actually let's take that conversation a little further down the road, but that must have been a big awakening for you. I know you wanted to be an
Yeah.
entrepreneur, but this is the
Oh,
first time you jumped in, right? So
yeah.
we've had other guests on the show that have shared the same story. They were at Goldman, similar actually. They were at Goldman, then they became a co-founder of an ed tech startup,
Yeah.
and it was the rudest awakening they've ever had
Oh, yeah.
about how they didn't know much and they just had to hit the ground running.
Oh, yeah. For sure.
Yeah,
Because, you know, when you join an early company, there's no infrastructure. That's
right,
something that you take for granted if you have previously worked at bigger companies, right?
right.
Like all the infrastructure is already there.
Yeah.
Everything from IT
Mhm.
to HR to
You
accounting,
have
like
somebody to
all things
call.
are there.
Yeah.
When I joined, I think we had 3 people
Okay.
at the corporate office, and there was no infrastructure, and so what that means is for the first while, you're wearing like 10 different hats and doing everything,
Mhm.
and because you don't have money, right? Like you do everything, even if it is going to be super inefficient,
Right.
you do it.
Yeah.
Like efficiency and doing something for efficiency is a blessing,
Yeah.
right? And that takes
Yeah.
capital.
Yeah. Yeah.
And you don't realize that until you have to run a company. But you do it even if it's super inefficient, as long as it's effective. If
Yeah.
it's effective, it gets the job done, and it's saving you money, you do it that way.
Mhm.
Unless you raise a ton of money, obviously, then it's a different
Right.
story.
Right.
But for
Right.
us, we've actually never raised money.
Oh wow.
Um,
Okay.
we bootstrapped, and so every dollar is very precious. And so yeah, you effectiveness over efficiency until a
Yeah.
certain stage, and we were literally setting up stores, and we
Mhm.
were buying equipment on marketplace Facebook Marketplace for cheap, and doing some of the work ourselves, and so that's a big shock. That's a big
Yeah.
shock, and there are a lot of moving parts you have to think about that you never have to when you have a corporate job, because everything else is done for you. All you have to do is just focus on your job.
Right. Right. And you also mentioned that so KupBop started in Utah. You're
Yeah,
also from Utah, right?
yeah. I grew
So
up in Utah.
you're the first Korean person I've met that grew up in Utah, to be
Yeah,
honest.
there aren't very many Koreans in Utah. That's for
And
sure.
so that begs the next question, which is how did KupBop start in Utah,
The
right?
founder was in Utah. He also happened to be in Utah.
But I mean, like, was like Korean food like a big thing there as well?
No. Oh no.
No. Okay.
Oh, it was literally like there aren't that many Koreans, and there
Okay.
were a few Korean restaurants in the whole state I could think of at the time.
Yeah. Yeah.
Maybe like three. Now there are way more. There are a
Yeah.
ton
Right.
now.
Right. Right.
Back
Right.
then, maybe it was three
Right.
or so, maybe three, four. So yeah, it was before this kind of whole, K wave of
Hmm.
K-pop, and all the Netflix shows in the U.S. And so it was well before that time. And so yeah, but the founder, he he was determined. He thought this concept was going to work, and he started, and he's a true rock star, and
Yeah.
he was able to, get it off the ground and
Yeah.
going.
And do you think that something about your childhood, right? Like you said, you went from Korea to the States when you were 11. Um, like, are your parents entrepreneurs? Like, where does the entrepreneurial bug come from? When I found, particularly with like Korean Americans, is it's somewhere there. Like maybe
Yeah,
not direct, but
yeah,
somebody did something like off the beaten path, and that has some effect.
yeah. My mom has kind of got that mindset. My dad did, in a way, do that.
Hmm.
Although he should, like, he's not somebody who's fit to run a business because he's too nice. He's an idealist. Like he
Right.
will like yeah, he has an interesting he started a school.
Oh, okay.
And so he was a little bit crazy like that in like choosing his own path because he graduated from the top law school in Korea
Right.
and decided to start a school for, people, who are underserved.
Hmm.
And so he kind of had that. But yeah, I think it was my dad's influence is big in that from a young age he would always have us read these books,
Hmm.
biographies of, you know, um Masayoshi Son, all these guys, great businessmen, and he would always say, think big, think big, think big. Um and it was almost like you almost get brainwashed in a way.
Right. Right. Right.
And you get to a point where, I'd be at Citadel and like, by most standards, that's amazing. And, and you're doing well. But there was just a part of me that, it wasn't getting fulfilled. I was like,
Right.
man, like, no, there's got to be something where I can make more impact on.
Right.
That's why I think when the founder said, hey, nobody's been able to do this, that
Right.
just completely, got me.
Yeah.
So yeah, I think that influence was definitely
Mhm.
big.
Yeah.
Um, but yeah,
And how did you? I guess a lot of our audience has some, not trouble, but a little bit of difficulty with this aspect, right? So you were at, we have that Korean American track, right? We have law, we have finance, we have medical,
yeah,
and then now, ironically, the trend has become like trying to leave as quickly as possible
yeah,
amongst a lot of the community, and uh there is some difficulty in getting over that the earnings component, right? To be completely frank, it's like, you
100%.
have great cash flow coming in, that going to zero is quite scary. And not
Yeah,
even not even talking about like the lifestyle that you can change,
yeah.
but it's just like going from the known to the unknown, cash flow to
Oh,
non-cash
for sure.
flow is a drastic change, right? And like, how did you brainwash yourself into getting over that aspect, or did that not matter to you as much?
Yeah, I think, and that's why I think it takes a certain personality to run a business. Because like once you start, as you know, having been a founder, it's a lot harder than
Yep.
making that jump. Like you're going through a ton of agony all the time.
Mhm.
And I think personally, I've always been a big risk taker on anything, right? Whether it be in my investments at Citadel, like
Yeah.
I'm always taking bets, right? I'm very comfortable taking bets. And so actually the money, the financial kind of um component wasn't a big factor for me at the time. And
Mhm.
partly, probably the biggest reason is because it's not like I had kids,
Yeah.
right? If I
Yeah.
had
Yeah. Yeah.
3 kids, then I think the equation would have been very different and would be very different. And that's why I have especially so much respect for people who jump when they have kids. That's a different game.
Mhm.
Um, but I was just married at the time. I just gotten married. And and also in a way, I think what people need to also realize is that you're not actually taking as much risk as you think.
Mm,
It feels like a ton of risk to jump, and it's overwhelming.
right,
But in terms of actual risk you're taking, outside kind of the opportunity cost of what you could have
right.
made versus what you're making, isn't that big. Because I say that because if you've done a good job with your previous company, the chances are you can always go back.
Right.
Like, look, like
Somebody will always want you back.
if
Yeah.
you've done well, like you're plug and play for the
Yeah.
employer.
Yeah.
Like, unless you're burning bridges seriously, you're
Yeah.
like they'll take you like that. And
Yeah.
so you can have that almost become your plan B,
Mm,
right?
mhm.
So in reality, you may not be taking as much risk as you think. It feels super overwhelming though.
Yeah.
Um, but yeah, so I would also think about that. So, do well and end things well, I think is good
Right.
advice,
Right.
right? Because you never
Right.
know.
Yeah. Well, it's an interesting topic that you bring up, which is the personality factor, right? And we have cultural nuances to it, but there is are founders made, right? Or do they already pre-exist? And we've gotten different feedback on that, but I do think it does take a certain personality. And
Yeah.
it's interesting that you bring that up because it's not, to a founder, it doesn't feel that risky either.
Yeah.
Like,
Yeah. For
it
me, it was
feels
like
like this is the opportunity you're giving up,
that. I
right?
mean, that was the thing because, when I decided to resign, like a lot of people around me thought I was crazy. He's
Yeah.
like, "Wait, you're joining like a small like restaurant startup, right?
Yeah.
Like, why would you leave like Citadel and join that?"
Right.
And you know what's really interesting? People who were all really surprised at my move was mostly Koreans. But I think also
Mm.
Koreans, tend to be a little bit more risk averse, right? They
Right.
grew up,
Right. Right.
like the culture we grew
Right.
up in. Um, but I was just like, yeah, if it doesn't work, I come back. Like, where's the
Uh,
risk? You know what I mean? And
Interesting.
so, yeah, it didn't feel
Interesting.
that risky to me. I was like,
Yeah.
if it doesn't work, I'll
Yeah.
just come back to New York.
Yeah,
And
that's really interesting. Now that I think about it, when I had left banking, all my non-Korean friends were very jealous,
yeah,
right? They were like, "Oh man, like I wish I could do something like that. Like I wish I
yeah,
had an idea or some passion to do something like that." But my Korean compatriots were
yeah. And
were
I
more
think
concerned for me. Yeah.
for sure, right? And also, I think for me, another big thing was like, it's another thing to leave, a prestigious finance job and like say, hey, I'm starting a tech, like tech startup,
Right. Right. Right.
right? Which is very sexy in the marketplace. And that's
Yeah.
like the cool thing, right? Um, like restaurants is like you're like as far as industry goes, you're looked at as like the bottom of the barrel, right?
Mm-mm-mm-mm.
Like a lot of times, like I think that's been kind of the connotation, and so I think people are surprised that way. But for me, kind of the thinking was, okay, I could join a tech startup and get point whatever percentage of
Right.
equity and hope these founders make the right decisions and have turn it into a $3 to $5 billion company, and hopefully we get to an exit and I get paid. Where I
Right.
was like, this is super early, but it actually cash flows right now, even though not a ton, but it's a cash flow. It's got a great brand. I'll be joining as like as the founder's partner. I'll be driving the ship with them. I'm getting double-digit percentage in equity. I was like, you turn that into 100 million, let's say, then you're already at,
Mhm.
like at those figures where, at some of these other firms, you'll have to be at a billion plus,
Yeah.
right?
Right.
And the
Right. Right.
math was like, the latter seems way easier to do.
Yeah. Yeah. Yeah.
And that was part of my thinking process too.
Yeah.
It was like just financially, you have to think about it too, and
Yeah.
it's got to pay off if
For
things
sure.
do go well, right?
Yeah. For right.
When I kind of ran that equation, I was like, yeah, I was like, yeah, 100 million valuation in
Yeah.
5 years. I was like, oh, that's doable.
I could
I
do
was like, I think it's
that.
totally doable. Yeah.
But so so I guess let's flip that question on its head a little bit, right? So you got pitched, okay, great, you wanted to join. But in a way, you also had to pitch yourself to get that meaningful equity like
Oh
later
yeah.
down the line, right?
Oh
And
yeah.
what was that like? Like what did you offer? What were you bringing to the table? Was it the financial
Yeah.
acumen?
I think. I mean, my the founder, Jung, my brother from another mother. He is very much a gut feelings guy. Like, and I think it just really happened when we were able to actually, after all these years, you know, meet in person, had an hour conversation. Like for me, kind of the thing was, hey, look, like if you if you keep just doing what you're doing right now, the business will break as you're
Mm,
feeling it right now,
yeah,
right? You can't put out fires every day without having processes because it becomes burdensome and it's
right,
not going to survive. And he was already feeling that. So I think
right.
that was helpful. And I was able to kind of convince him in a way that I said, the company also had no money. And I was sure I was definitely I took a massive pay cut. Like
Yeah.
massive as in like I was making, I think when I went in, on the cash comp all in 100K my first two
Uh-huh.
years, right? Because the we didn't have money, and when any money we had, we were going to build stores, and so I pitched myself as, okay, we need to put in the process procedures to be able to scale this incredible brand we've created,
Mm,
and it was like within restaurants, the concept itself is more scalable than I think competition. It's simple operations, smaller footprint, kind of all of that. And I said, and at some point, if we want to start going out to market, there's certain metrics that we have to really start caring about.
mm,
And we've got to start building the company with that kind of, goal on mind. Um, and so yeah, that's kind of what I pitched him, and when we met, we just really connected, and it was like, okay, let's try to do this thing.
mm-hmm. That's awesome. So I mean that's a great transition. I think we can I want to talk more about CupBop, right? So I think we kind of understand the genesis, but let's talk about that hyper growth you guys have been experiencing since after you joined, right? And so 9 shops, you said when you joined.
So yeah, because we took a few months, but when I joined, we just had opened our 10th, so we were at 10
Okay,
locations.
10 locations. How many
Yeah,
locations are you at now?
we are. Well, we had 10 in the States at the time, and we had like two or three in Indonesia, which is another story.
Okay,
But now we're in the States. We're about 60 now.
60 in the States.
Yeah,
Okay,
and we
yeah.
have a lot. We have these combo stores in Indonesia with the boba brand that our partners run. So we have almost 200 in Indonesia at this point.
Oh wow. Okay.
Yeah, we actually have more there. Um, so yeah, we've definitely grown. But a lot, I mean, a lot of painful days, still painful. I mean, that's how it is,
Yeah,
right? And
it's always.
I
Yeah,
joined in 6 months after, like a few months after COVID hit,
yeah.
right? And that
Right.
was, we thought we were done when that hit.
Mm,
We were really close to being done, like very
okay.
close.
Yeah,
We didn't
yeah,
think we were
yeah,
gonna make it.
yeah, 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 yeah.
That survived
And
through
so,
that.
I mean, we'll talk about that too. But like scaling from 10 to 260, you can call it,
Yeah,
and 200 of those are literally on the opposite side of the
yeah,
planet. Um, okay, that's a loaded question. Like, how do you get there is a loaded question. So
yeah,
let's just start off with that journey of getting from 10 to 60,
yeah,
right? Like,
for
what did
sure.
you guys
Yeah,
have to do to even take those steps?
right. Because yeah, you're exactly right. Like the answer to how do we grow so fast in Indonesia would be like all luck. We have amazing partners, and they do all the work to scale. And so the only thing we do is we visit and like a couple times a year, and we help them with new menus, this and that. But like they should get all the credit for scaling in Indonesia.
Mm.
That's because they're doing all the hard work. In the States, it was really look, it's like one at a time, honestly.
Yeah.
It and I think we could have even been faster if we had opened up our brand for franchising.
Okay.
Which we had one franchisee that was grandfathered in before I joined. But since then we haven't taken any outside franchisees.
Okay.
So, we're still majority corporate. And yeah, it was one store at a time, really. I think that's all I can say. And, COVID was very tough. We kind of had that near death experience then.
Hmm.
But then, with our concept being QSR, when takeouts and kind of third party delivery started taking off, we got into a decent cash position. And coming out of COVID, we just like really doubled down because a lot of restaurants went out. A number of good kind of real estate was,
Oh,
it was finally available at
right.
reasonable prices for a
Mhm.
period of time. That didn't last very long, by the way, but
Mhm.
so we kind of doubled down, and
Mhm.
like there were a couple of years when we were building, like 15 a year.
Yep.
And
Wow.
it was like literally finding a location and, going, doing the research, um, and just building it out as fast as we can. And one adds up,
Mhm.
adds up, adds up, and before you
Right.
know it, um, you're much bigger. But we're kind of still in that phase of it's a constant. It just never ends, right?
Yeah.
It just never ends. And a lot of people think, hey, like, man, it must be so much easier now. Like you're at 60 locations, it's not like, you're at 10. Um, it must be, you must having have you know, you must be more calm and less stressed out than where you
Yeah.
were. No, it's not how it works. You're more
Right.
stressed,
Right.
right? And it's because your risk is now supersized
Mhm.
at 60 locations versus 10. Your cost structure, just your
Mhm.
fixed cost, your payroll, right, is now
Yep.
supersized,
Mhm.
right? And so your risk is over here now.
Yeah.
Um, Plus, as when you try to grow, and especially when you try to bootstrap, in any business you grow, cost doesn't go up linearly, right?
Right.
Like it'll do this, and then there's a point where all your processes are going to break.
Yeah.
And so you have to, make all these investments, and your costs jump up like this, and you go in these big lock steps,
Mhm.
right? And, we were making more money than we were probably 15, 20 locations ago because our cost was much lower, right?
Right.
But it's a
Oh.
never ending, right? And then your cost goes up, and you have to have a certain number of stores to be able to really, leverage
You
down
gotta
the
keep
G&A
growing.
and
Yeah.
all of the fixed costs, right? And so and you keep just betting, and you keep going, but it's scary, right?
Yeah.
It's scary. 10 locations, like those were days when, like, if things really got tough, we
You could
could
go.
just, we could put in infuse some capital just from personal money,
Yeah.
and you could put in a few hundred grand and they would last for a while.
Yeah.
It's not the case anymore,
Yeah.
right?
Yeah.
And so it does get very scary.
Yeah.
But that's the beauty of trying to run and
Yeah.
grow a business.
Right. Right. And one of the things I don't know how it is in like FMB really, but one of the things they say to founders is like focus on a market or where you're going. But you guys decided to go global, right?
Yeah.
Simultaneously with growing domestically. Was there like a big reason or catalyst for that?
No, it was just all luck, honestly. Indonesia was luck. Like
Okay.
and that was before my time too, when my founder first met our partners there. Big shout out to Alvin and Devin. Um, they're the guys who loved the KupBop food truck like I did, and they
Okay.
were both students at the University of Utah. These two, Alvin and Devin, they were brothers,
Yeah.
and they loved the concept so much that they pitched the founder, "Hey, we want to take this to Indonesia."
Okay.
And the founder was like, "I have one food truck. Like, I can barely get out of Salt Lake. You know what I mean? Like,
Yeah.
come back in a year and we'll talk." A year later, they come back and say, "Hey, you promise we're back here. Um, let's really look into this seriously. Come to
Mm.
Indonesia with us." So they end up flying out to Indonesia. It turns out these two brothers, the family that they come from, one of the like the 10th largest conglomerate, like
Right.
in Indonesia, and they come from one of those families. And
Right.
so it was like a handshake, and they started
Wow.
going.
Right.
So that's how Indonesia grew. So it was by luck. It was not
Okay.
by kind of intent at the time. That said, now we have been looking at some international opportunities. We did recently just sign our second international kind of opportunity in the UAE with an
Okay.
amazing group. And so
Okay.
we will be, yeah, we are probably looking to open our first store in Dubai over the next few months. So first
Yeah.
half of next year, very likely,
Yeah.
and we'll have
Oh,
more
that's
stores
awesome.
there. We're
That's awesome.
looking at a couple other places as well right now. And
Okay.
so we're strategically, and it just really depends on the partner. That's everything, right? Can you trust the
Right.
partner? Do they have the operational capabilities,
Right.
right? And the infrastructure in the market to really protect the brand. And,
Right.
and and if that's the case, then we would take it very seriously.
Right.
But obviously, domestic is a huge focus for us, and we're continuing to kind of look for ways to grow in the best, most profitable way possible.
Yeah.
Because growing too fast, and that's one reason why we didn't franchise domestically, is because I mean, there are opportunities. I mean, and there are a lot of temptations when you run a business, right?
Sure.
Like you're faced with all kinds of temptations all the time.
Yeah.
Um, like I mean, especially with Shark Tank, we could have sold like 2,000 franchises,
Right.
right? And it's tempting because it's all upfront cash. It's like on capital, you're taking no risk,
Yeah.
right? And franchisees take on most of
Yeah.
essentially all
Yeah.
the risk. Um, we decided not to go that route because number one, we felt that we weren't ready at the time. We're like, man, all these people are going to be investing like their life savings. Like, are we confident right now that we can handle that pressure?
Hmm.
Like, like not just the pressure, but as an organization, we didn't feel that we were ready for it.
Yeah.
And wanted to make sure that we proved that the model a little bit more.
Right.
Um, but yeah, there are temptations all the time. But part of business is just really looking at you know what you see in the long term. What's the right decision in the long term versus short term? Because
Yeah.
especially a business like restaurant isn't software where you can raise, if you are successful in raising a bunch of money, you get a massive sales team and go out and you can
Sure.
hyperscale, right? These things don't scale that quickly. And a lot of times, if you scale fast, it's literally the worst thing you can do
Right.
because of the operational intensity of the business
Hmm.
model. And, it has to be like when experience is everything and you try to grow too fast and, your food consistency starts going down, your customer service starts going down, then your brand's done,
Right.
right? And so we kind of
Right.
weighed
Right.
all
Right.
these things and said, hey, yeah, obviously franchising, that would be a big opportunity, but let's hold off.
Hmm. So, but you guys are bootstrapped, but you did go on Shark Tank,
Yes.
right? And
Yeah.
so there must have been a rationale for going on Shark Tank, maybe for visibility or branding, or did you earnestly, was the intent to take on meaningful outside capital if it
It
makes
was
sense?
less about capital.
Okay.
It was more about getting exposure and then getting a right partner.
Hmm.
Um, And so, we got on the show. We ended up on the show. We ended up doing a deal with Mark.
Yeah.
And we had full intent of going through with the deal.
Sure.
Um, the founder and I, we gave our word on the show. Like we wanted to. We're
Right.
not here just to, get exposure and not
Right.
be serious
Advertise.
about getting a
Right.
deal. Um, we just aren't like that. And so, we truly engaged with them for a few months. And what it is really, on the show, you only really talk about your valuation. That's it.
Sure.
And then after that, you know, you start going back and forth with their attorneys, and there are all kinds of stuff, right? First rights to
Yeah.
this, that. There's liquidation preference to this, to that. And, for Mark, because he has so many deals, he has this template for Shark Tank,
Right.
right? And most of Shark Tank deals are much smaller than ours, right? Like at the time. And so like those terms just didn't fit with us at our size,
Uh-huh.
right? And so, we did talk to them and say, hey, look, like you guys are investing, like you guys are already getting instant equity coming in at that valuation. You guys are gonna
Right.
go be owning 5%. Like I can't give up all of our rights, you know,
Right.
to a
Right.
5% holder. And so, but he just has too many things. And so that's why the deal ended up falling through. But huge, huge respect to Mark. The dude is a beast. Like I would email him and he'd get back, no questions, always within 30 minutes. The dude is a beast. And full respect for him. But yeah, that's why it fell through. And so that was going to be our first like actual official capital raise if it went
Right.
through. But since it didn't end up being,
Right.
um, we have yet to raise. Yeah,
I feel like you would have been approached.
yeah. I think it would have been an amazing. I think Mark would have been an amazing partner.
Oh, well, not by Mark, but I mean, like, I feel like you would have been approached by other interested parties
Like
during
approach.
this
Oh yeah.
journey.
Oh
Yeah,
for sure. We get approached all the
and
time.
you turned them all down.
Yeah.
Is
Yeah.
it because you believe in the ethos of this bootstrapping? There's no point in non-strategic dilution. Like, is that what you're going with, or literally everyone that's been approaching you, none of it was that
No, no.
interesting?
It's I think, and never say never, right? Like
Sure.
there's time and place for that. And I think up until now, it just I think part of it was just like, hey, let's bootstrap as long as we can. Let's see where we
Okay.
can go with this thing,
Okay.
right? It's almost that, it's like
Yeah.
like you just want to try, like how far
Sure.
you can go. I think that was the biggest. The other reason is also because of the industry. If it was any other industry, I think we would have raised much earlier.
Uh-huh.
Would have raised by now. If it was software, if it was like
Yeah.
even like any other industries, it makes sense. It just makes sense to raise and really kind of get that acceleration and growth.
Right.
Coming back again, this industry, like trying to open 30 restaurants at a time isn't necessarily a good thing. A lot of time it backfires. And
Mm.
so it's almost like,
Oh, that makes
is it like if we raised 15 million, $20 million today, like,
what happens. Yeah.
yeah, like now,
Yeah.
then now you have
Yeah.
pressure to
It's
show
a
growth.
dual-edged sword. Yeah.
Yeah, you have pressure to
Yeah.
show growth in an
Right.
industry where that may not
Growth
be the
can
best
hurt
thing,
you. Right.
right? And that's why I think that's also a big thing. Industry is a huge reason.
Yeah.
Now the counter argument would be like, but it's such a capital intensive industry. Like you need
Right. Right.
capital,
Right.
like to
Right.
build stores, and stores aren't cheap,
Right.
right? But I think, yeah, a few of those reasons have
Yeah.
kept us from just kind of like, we still talk to, a lot of funds that reach out. I probably talk to at least one, fund that reaches out probably per
Right.
week.
Right.
Just haven't
Just
yet.
having, yeah.
And
I mean,
and yeah, it depends. I think, yeah, I think there could be a time down the road where it makes a lot more sense.
Yeah.
And when we decide to, we'll go ahead and we'll do it, and that'll be a different, kind of a trajectory from there. But I think we've done. I think we've been happy with our decision so far.
That makes a lot of sense, right? Like, because I mean, even when you were in banking, actually, you were in capital intensive
Yeah,
um, industries, and I also covered energy, and so when you think about capital intensive businesses, actually, you can only raise the amount you can spend. Like
yeah,
like there's a finite amount of money you can spend, right? And like
right,
that's the
exactly.
target. You can't raise more than that and say I'm going to throw more sales guys in there.
Yeah,
I'm going to sell
exactly.
more electricity. It's
Yeah,
impossible. Yeah.
yeah. So
So
that said, we did do a transaction last year. We did do a secondary transaction.
okay,
So the shareholders were able to, take some off the table and do a
yeah,
secondary.
sure. Yeah,
But yeah, still have not
yeah.
raised anything on the balance sheet.
Well, I learned recently. I had no idea, but there's a K barbecue brand that IPO.
Oh yeah, Jen.
Gen Barbecue. Yeah, and I was like, and we're gonna try to get the founder on the show, and he did Baja Fresh, and I'm like,
Yeah, I met
K
with
barbecue IPO.
a few
You
weeks,
know,
probably a couple months ago at this point. Yeah,
yeah.
I sat down with him. Yeah,
Oh, with David. Okay,
yeah,
and yeah, I was just I remember kind of being taken aback by that, saying like K barbecue was just like a soju K Town phrase,
yeah. Not anymore, man.
right?
I
Right?
mean, the scene in New
Especially
York's
in
very
finance,
different
it's
now
like,
too, right?
hey, ask the token Korean guy, like, let's go to K Town. You know what I mean? Like
Yeah,
when
yeah,
you're in finance, right? It's like saying, where should we go? Where should we go have soju? And like that's K barbecue. Now it's like IPOing, and now we have CupBop, that's gonna take it global, and it's just like fascinating to see. But you're seeing it kind of on the ground level of this adoption of K food, right? Like people kind of take to that. I remember when I was growing up, I grew up in New York. Like, people would call the cops because of kimchi jjigae, because like they didn't know what
yes,
it was, right? And like the
yeah,
smell, like, it's like they thought something died,
yeah.
and now you're seeing it everywhere. Right? Like, everybody wants a piece. It's like, what has that been? Are you seeing just general awareness of it, or people are just more open minded, or people like actively seeking Korean food?
I think definitely a different scene. Definitely a lot more. That said, you won't feel it as much as like in Utah as you would in New York,
Sure.
obviously, right? It, kind of the, Midwest, a lot of these states, it's still underpenetrated.
Yeah.
So there's still a lot of education process going on, this,
Okay.
that. Um, still some, a long way to go. But that said, it's still a very different scene. Even
Yeah.
I would imagine anywhere, right?
Yeah.
Versus say 10 years ago.
Right. Right. I mean, do you guys look at like, well, I guess with Mark that would have been something interesting, but like sporting venues, right? You guys are
Yeah,
in a lot of those as well, right?
yeah. No, it
Yeah.
fits us very well. So we're at the Delta Center with Utah Jazz.
Okay. Nice.
We're in the Paycom Center, Oklahoma Thunder.
Okay.
We're in a bunch of college football stadiums.
Okay.
Um, so yeah, it fits us very well. A professional soccer
Okay.
stadium here, and so that's an avenue that we definitely want to continue to grow in.
Okay. Awesome. Awesome. And you know, you went from being a banker, now you became a founder, and scaled up. And there must be a next chapter for you, right? Like what you want to do with CupBop at this point. Now you're at 60. Is your next target 300 in the States? Like what's the organizational scale you're trying to get to, or is it still, back to the ethos, one shop at a time?
Yeah, I think the goal still no doubt is um is how do we become a national brand?
Yeah.
And the equation is, location is important. Location count is certainly important. but it's definitely not the most important factor, right? Like I would say, like for the longest time, like In and Out had like 100 locations and only in Cali, right?
Yeah.
But no doubt they were a national brand. You couldn't find anybody who didn't know In and Out, right?
Yeah. Yeah. Yeah.
Like the
Right.
way Shake Shack, even before they IPO'd at 50, 60 locations already for all purpose was a national brand.
Yeah.
Because everybody knows about them, and they have that kind of impact.
Sure.
And so our goal absolutely is to still become the national brand. Um, that does mean that we'll need a lot more locations. We'll need, our average kind of unit volume will also need to be higher.
Sure.
And those things will come with with time, experience, and the capital,
Right.
right? And there are ways to do it, like either franchising, raising money,
Yeah.
right? Like you can just and if you don't do either of those, it's not impossible. It just takes much longer,
Sure.
right? Like Jersey Mike's is a great
Mm.
example where I mean, just a few days ago they announced that Blackstone's buying them for 8 billion,
Wow.
um, which is crazy. And a
Unbelievable.
lot of people think, oh, like Jersey Mike's, like they
Yeah.
came out of
Sandwich
nowhere.
shop.
Like, who are these guys? It's like
Yeah.
they've been around for a long time, right?
Yeah.
Most of these
Yeah. Yeah. Yeah.
brands, obviously with technology, kind of that, it doesn't take as long nowadays, nowhere near. But we even have to remember, just even brands, top brands like Chick-fil-A, which is, they're the gold
Yeah.
standard. They really only started getting noticed 15 years ago. They've been
Yeah.
around years, tens of years before that,
Yeah. Yeah.
right? So it does take time. Um, but we want to do it at the right pace.
Yeah.
At the right pace. Because in the restaurant industry, you'd much rather have, and you've been in finance, you know this better than anybody. Location count doesn't mean that much, right? What really
Right.
matters is your four-wall unit economics,
Sure.
right? Because location you can buy with money. Money's commodity. So
Yeah.
location count is almost commodity.
Yeah.
What you can't buy are the unit economics, and that's what makes you
Yeah.
special,
Your prisoners.
right?
Yeah.
You
Mhm.
know, and exactly how Shake Shack did it when they were, people thought they were crazy IPOing at that kind of numbers at 60
Yeah.
locations, but they had crazy unit economics.
Yeah.
And you run the forecast, and it's like, hey, by the time they get to a few hundred locations, like they'll be
Yeah.
worth over 1 billion, right?
Yeah.
And they've done that. They've more than grown into that. They're
Uh,
several billion now. And
when
so
I
yeah,
eat at Shake
location
Shack in
growth.
Korea, I'm like, they're worth several billions because it costs a fortune.
Yeah,
Like just eating there with a couple of people, right? Like
yeah.
that's a unit economic, and people still buy it. So
Right. So yeah, yeah. Well, like I don't have location count goals annually
yeah.
generally. I think we'll start having that at, like I used to actually be more, we'd have, okay, we got to build at least this many this year. We have a good idea of what we work on. Um, but it's not a mandate. Like we want to hit these location counts because you
Right.
you don't want to like get into a situation where you want to hit these quotas, so you end up opening subpar locations.
Right.
Like existing locations are always more important than new,
Right.
and so that's kind of the mindset, and and kind of that natural growth. Even if you're growing organically, does speed up as you become
Sure.
bigger and you have more cash flow available, and so and that franchise route is still available to us. And that's going to really just depend on who the operators are,
Right.
right? Like if like we want to work with rock star operators, right? That we could probably learn from,
Sure. Sure.
right?
Sure.
So
Right.
yeah, we'll always continue to kind of look at kind of all options and
Yeah.
what we think is the best. But yeah, we want to be a national brand. That's what we want to be.
Awesome. And if you had a couple of words of wisdom for those that are looking to do their own thing, right, or leaving, a very well esteemed job to become an entrepreneur, what type of advice would you?
I think a couple things, like just know that grass is always greener on the other side, right?
Mm,
And it's it's kind of the cool thing, right? Like you're a founder, you joined a startup, um, but you'll have a lot more responsibility, I think, which is why it's so exciting, I think.
yeah,
But also, your pressure will be much, much heavier, like much higher, much heavier. I think one of the most important skill sets of being, an entrepreneur is really like having a high pain tolerance. Um, because you have your whole team and looking at you to make the right decisions. Like not only them, their families, right? Like are dependent
yeah,
on this company to do well. And it's a lot of pressure. It's a lot
yeah,
of pressure. And it's definitely it can be very painful. But like in that pain, is when you find the wins, and
yeah,
those are the most amazing moments, right?
right,
Like almost dying during COVID and getting out of that was like,
yeah,
oh my goodness. It's like if we can survive through that, we can survive through anything,
right,
right? Um, and so, but I think, and just don't, you know, look at it because it's like the cool thing to do. Like look at it if you really want to do it, right? And
right,
I think that's important too,
right,
right? Um, because because like I said, I think it does take a certain kind of personality
right.
for sure. Certain kind of
So
personality. You
it's
have,
a bit like self-reflective, right?
yeah. I mean,
When you're trying to decide.
you have to be very comfortable making bets, and you have to be very comfortable, when you lose, right? Like you can't panic as the management team,
Right.
right? Like when everybody else is panicking, right?
You panic
You gotta
together.
keep a very cool head,
Yeah, cool
right?
face.
A
Yeah,
cool face. Like even I
yeah.
mean during
Crying
COVID, right?
inside,
Like in
cool face.
our toughest times, like, it's like, oh my goodness, you're wearing a payroll, right?
Yeah,
Because that's real. That
sure.
comes around every 2 weeks,
Yeah, that's real.
right? And you're like, oh my goodness, I don't know how I'm gonna make it next week.
Yeah,
Shoot. But you can't
yeah,
show that.
yeah. You
You gotta
can't.
find a way.
You just gotta keep
Find a way.
smiling. Find a way. Yeah,
Yeah.
yeah.
And so yeah, and another thing is I would say keep an open mind to different industries.
Mm,
Right? I love these non-sexy cash flowing businesses. Like
mm.
that's all I want.
Good point.
Like these
Yeah,
underserved, undercovered. I mean, like there's cash flow,
yeah,
right?
yeah,
Like
yeah,
I mean, and we've been able to grow organically,
yeah.
right?
I mean, there was somebody else just, one of our advisors just brought up the same point, which is there's so many different ways to make money.
Oh
So
my
if
god.
you're
And
trying
that's
to do
one
this
thing
to
we
make
do
money,
realize, I
yeah,
think. Like
yeah,
leaving kind of I think for me, leaving Wall Street and now getting into the business world, I'm like, there are so many ways to make money. It's crazy.
yeah, yeah,
So
yeah,
many different ways.
yeah. You could
There's
literally
much
do
easier
anything.
ways
Yeah,
to potentially do it for sure.
yeah, yeah. There was a crazy story I heard. I think it's like a Korean couple. They do $700 million of fish wholesale to Costco, but they don't actually take any inventory. They just do the processing from the port to Costco,
Yeah,
and their top
it's
line
amazing.
700 million.
Yeah. Look,
It's insane.
there are a lot of ways to make money. And
Yeah.
restaurants is one of them. I mean, it can be very profitable. Like that
Yeah.
was one thing I was shocked by when I, started looking into it, when I started looking at
Mm.
financials, and it's like, man, you can own a store and you can generate like amazing,
Yeah.
amazing, cash flow.
Yeah.
And it's like,
You just got
wait,
to make sure the store works.
yeah, it's like
Yeah.
because look at it this way, like if you're working in corporate America, if you want to make over, let's say 500 grand,
Yeah.
like the company has your soul generally.
Yeah.
Like
Sure.
$1 million and
Your
over
time
for
and your
sure,
soul.
right? For sure.
Yeah.
Right? Like you don't like
There aren't that many jobs that pay that much. Yeah.
exactly. And
Yeah.
so, but what I was shocked was, you look at some of these restaurants, it's like, wait, I could own like a few of these restaurants and I could cash flow $1 million a year, like
Yeah.
passively. And like when I first realized that, like I was super shocked. I was like, that's actually crazy. Like
Yeah.
passively, like not like being in it full time, right?
Sure. Sure. Just
And
letting it operate, making sure it just hums and haws.
exactly.
Yeah.
And it is true where you look at as far as let's say your compensation, right?
Yeah.
There are a lot of different factors that go in to determining one's compensation,
Yeah.
right? The size of the company, the
Sure.
industry,
Mhm.
right? The role within the company, right? Like what kind of function, right?
Yeah.
Your tenure, this, that. And then you realize that, like, out of all of these factors, there's actually one factor that is the big elephant in the room, and rest are kind of almost irrelevant.
Mm-hmm.
And that factor that really determines everything is how much equity you have. That really
Ah.
trumps
Okay.
everything.
Right. Right.
And so,
Otherwise, you're just getting paid a salary. Yeah. Yeah.
yeah, yeah, exactly.
Right. It's really funny you bring that up because they just did a polling for Americans. I don't know if you saw it about what they think a good salary is,
Yeah,
like to live life, and the average came out to like 270K.
yeah,
So Americans think you need 270K
yeah,
on average to live a decent life.
yeah,
Apparently, MZ was in excess of 500,000.
yeah.
So either it's like not in touch with the reality, or they just want to spend a lot of money. But
No,
it
I
sounds like
mean,
every MZ has to be an entrepreneur because
it
there
makes
aren't that
me
many
look
jobs.
like I don't blame them. Like they grew up on social media.
Yeah.
They literally grew
Right.
up on social media. You can't have any other views than what they have right now. That's all they
Right.
see,
That's all they see.
right? That's all they see.
Grabbing it.
Like whether how distorted that reality is, like
Or
that's the
not.
reality for them, and that's what they see.
Yeah. They could make it reality. We just
Yeah.
don't know.
Oh, you can.
Yeah.
I mean, for sure. That's why America, is like it's the land of opportunity, right?
Yeah.
A
Yeah.
lot of opportunities.
Well, awesome. We're running up on time, Doc. Any final pearls that you want to give for people getting into K food? Maybe more specifically?
Yeah. K food. Yeah, food's tough. It can be great, but it's definitely a tough business. Um, but I would say that, it can be very worth it.
Right.
And not everything has to be a national brand,
Right.
right? The reason,
Sure, sure, sure.
we're going that way with CupBop is because, the concept is built that way and it is quite scalable, right?
Sure.
If we were a big sit down restaurant, like you can own one or two great restaurants and you never have to worry about money, right?
Yeah.
You can
Right.
you can absolutely be there, right?
Right.
And so yeah, if you're interested, why not take a shot, right?
Uh,
Um, and for K food people who are trying to get into the restaurant industry, like my one piece of advice would be do everything you can to lower fixed costs because it's
okay.
already
There it is.
a very high, a business model already has very high operating leverage. And so like if your fixed costs are high, your rent, right, your labor
Mm-hmm.
essentially, up until a certain point is fixed as well. Like you're starting by a losing battle from day one if your break evens
Right.
are really high, right? And so do everything you can to lower your fixed costs. That'll give you time that you can, earn to, bring more people in and really continue to kind of figure it out until,
Right.
you land at the right spot where you can then start growing. So fixed cost is everything.
Fixed costs. Well, you heard it here, folks. Fixed costs are everything. If you're getting into K food, make sure you keep your fixed costs low. Thank you, Doc, for being on our show on K Start, hosted by KSE. That's a wrap. If you have any questions for Doc, hit us up in the comments, and then we'll make sure that it gets to him. Thanks, everybody. Thanks, Doc.